Is Microsoft a strong buy? What are the analyst predictions for Microsoft? Will Microsoft get to 600? Let's take a look and do a deep stock analysis on Microsoft. So there's some big risks in the market. There's no question about that. There's everything going on in the Gulf with the Iran war. And people who are worried about these things say that economies could grind to a halt if we have an oil shortage. And that might be why Microsoft is looking pretty compelling right now. So first off, let's talk about how Microsoft makes all of its money. Well, they make 40% of their revenue from server products, cloud services, 22% from Office products and cloud services, 10% from Windows, 9% from gaming, 7% from LinkedIn. Well, LinkedIn is growing. Everyone uses LinkedIn. Obviously, everyone's out there playing their Xbox gaming, and people are using Windows. Whether they like it or not, they're using Windows. So that's growing. And what's most important, that I find most exciting, and what really I think future-proofs Microsoft, is everything to do with their cloud services and their server products and cloud services, which in total, if you include Office, makes up to 62% of their revenue. Why is this so important? Well, we're in a digital transformation. More and more people are doing all of their business online. Guess what? We've got this thing called AI. And where is that happening? Well, it's happening in the cloud. And you know what? The cloud business is booming because all of these enterprises are adding more and more AI functionality. People are using more and more AI. Look at the cloud business as it continues to drive Microsoft's growth. In 2024, it was $56 billion. Now it's $81 billion. It's a staggering expansion. And NVIDIA is telling us right now what the future holds. Because if you don't believe in AI and the digital transformation, well, guess what? They think that the humanoid robots are coming. And you know what? Whether they come or they don't come, we still have all of this compute that's happening right now. So Microsoft is making a ton of money. And they're set up to make even more money if these humanoid robots start coming into existence. So it's almost like a can't lose situation. See, NVIDIA powered humanoid robot industry with cloud to robot computing platforms for physical AI. Let's translate that into plain, simple English. Well, we're going to have a robot. It's going to connect to the cloud. And who has the cloud? Well, here's this handy dandy chart. Amazon has 28% of the cloud. Microsoft, 21%. Google, 14%. So you got the number 2 leader with cloud. And cloud infrastructure service revenue, according to this chart from Statista, is growing 35% year on year. That's some staggering growth. Microsoft is positioned to take advantage of all of this. Now, let's talk about this. There's a lot of opportunity. There's a lot of risk. But you know what? If oil gets a little more expensive, is that really going to affect the cloud revenue? I don't think so. But if oil gets way too expensive and puts a huge drag on the economy, then eventually all of these things will be affected. But if they're not effective, now could be a huge good entry point for Microsoft. Let's look at the price to earnings ratio, the PEG ratio, the price to earnings, the price to growth of Microsoft. Well, their forecast forward PEG ratio is 1.4. Now, the PEG ratio at 1, the price for earnings to growth, how much you're paying for that growth in the future, a 1 is considered fantastic. Anything like this, for such a quality company, Microsoft, I consider to be a very quality company. And I'm only paying 1.4 times the growth. That sounds pretty good to me. So, is it a good entry point? Let's get closer to the valuation. So what I like to do is use this chart to look up what the market has paid for Microsoft. In the past, when people are really excited about stocks, well, they've paid as much as 37 times earnings for Microsoft. And back when they're worried about stocks, worried about business, right here during the plague in 2020, Microsoft, they only paid 25 times earnings. And guess what? Right now, the market is 24 times earnings for Microsoft. This is a phenomenal opportunity for Microsoft to be this cheap. And you want to take a look at it, because only a few times in the last 5 years has this opportunity been presented to get Microsoft at such a cheap level relative to its earnings. And I'm a big believer that the market is going to tell me the answer. And the market, well, it likes to pay between 24 and 37 times earnings. That seems to be the band that it lives in. And that puts it at the very lower end of the band. Now, of course, if we have a recession and the economy slows down or something terrible happens to Microsoft, well, this multiple could shrink. That's not impossible. But also, people could get more excited and the multiple could expand. It could expand all the way back up to 37. It could expand beyond that. Just look at what happened to Google recently. Everyone said it was a loser in AI, and it was trading under 20 times earnings. And now it's trading over 30 times earnings because, well, it's doing all these exciting AI things. So right now, the market clearly is unexcited about Microsoft. But the cloud revenue, the Office revenue, the Windows revenue, the LinkedIn revenue, that's not going anywhere. And I think Microsoft has a call option on the future with its stake in OpenAI. Maybe it works, maybe it doesn't. They also have a call option on the future of humanoid robots because, well, they're building all the cloud infrastructure. They've got this cloud infrastructure, and NVIDIA is telling us that they're going to connect directly to it. So I get to buy a quality company at what I consider a fair price. Let's take a look at the forecasted growth for Microsoft. Well, the current quarter is 14% in sales growth. Analysts are expecting 16.9% for the entire year, and next year, 16.5%. So they expect the growth to continue. What does that mean for us? So I made a valuation model to look at what price I would have to pay to potentially get a double on Microsoft. That would be a return of greater than 15% per year. So I put Microsoft in here, and we're halfway through the year, so I just put an added 7% growth rate for the rest of the year, even though analysts are expecting more than that. They're expecting it to go even higher. Then next year I put in 14, 14, 14, 14. I'm just guessing at this. They're guessing at it with their projections. They're projecting higher. So I'm going to put in even a lower number just to make sure that I have a margin of safety. Now, Microsoft has a net income percentage of 39%. And that tells me that if the market doesn't like Microsoft a lot and the multiple stays the same at 24, there is a potential for an 83% upside right here. And that works out to be a 16%, just over a 16% per year return, which I think is fantastic. I've included a tiny dividend and a tiny buyback just because they have something like a 0.8% dividend and they did 0.2% buyback. So I'm not expecting them to up it. I'm using really conservative numbers here. And even with that, that means maybe I get a 16% return if everything works out that way. And that means a share price required to get a double, I would have to buy Microsoft at $364. Right now it's trading at $408. However, if we get a multiple expansion, let's say it gets way back up to that 37 that it has visited numerous times, well, that could be as high as a 36% per year return. And the price that I would have to pay to get a double on that, well, it would be as high as $562. Now, I don't know where Microsoft will trade. Maybe it will trade somewhere in the middle. Maybe it will trade around 30. It's traded around 30 many times for years. So if I had to place my bet anywhere, I would bet there. That means to get a double, I would have to buy Microsoft lower than $456. Right now, it's $408. So barring any sort of recession or global ending oil craze or the end of data centers and compute and no one uses Windows anymore, I think Microsoft is one of those compelling companies you should take a close look at. It is a screaming buy in my opinion. It's not to say you should just follow my opinion and go out and do it, but what you should do is use this as a foundation to start your research. You can look at it and then go do your research and make your own judgment. One final thing that I want to add that I think investors don't necessarily realize about Microsoft, well, everyone loves to buy index funds, and Microsoft happens to be just 4.4% of the S&P 500. So that means every millennial, every boomer, every financial advisor who says go buy an index fund, go buy the S&P 500, if you put $100 into the S&P 500, well, $4.48 are going into Microsoft. This puts a floor under the share price of Microsoft, and it continues to push the stock up as long as people are buying index funds. Whether they like Microsoft or not, and they're buying an index fund, the money is going into Microsoft. So this puts a buffer under the bottom of Microsoft in a way that other stocks that are not such a big part of the index, they don't have that buffer. So I think this is something that just is an added bonus to Microsoft. Is part of the reason why I'm considering it heavily right now, and you should consider it too. What is the best stock to buy now? Click to my channel page, follow me, and click the link in there to find out.